Hi there, Serial Trader here. Let's have a look at the major US indices. And alright, given today's action, I think we have to lean back on the possibility that we do have a completed impulse wave after our wave 4 triangle, completion that we had there on May 3rd. May 3rd was the beginning of this impulse wave that we've been working ever since. And at this point, we can certainly count 1, 2, and then we have an extended third 1, 2, 3, 4, 5 of 3, and then we had a 4, and now a 5, and we have a potential significant peak in place. And sorry about all the clutter here, but I'll have to go in on the smaller time frame to show the subdivisions. So I believe 15-minute price chart should be good. So I have this labeled. So as of yesterday's video, I had issues labeling this as an impulsive decline, having a 1 down, 2 up, 3 down progress. I was thinking more ABC down, but having a closer look at the subdivisions here, you can certainly make the case that you have a little 1, 2, 3, 4, 5 down for 1. Now this 4 looks very outsized as far as how much time it consumed compared to this little 2. So that's kind of a strike against that interpretation. But other than that, it does work, and it doesn't have overlap. So overlap between 4 and 1, no, that didn't happen. And you can certainly get 5 out of it as far as the actual wave count. Now this choppy mess to the upside where we failed to make a new high, this counts quite well as an ABC for W, ABC for X, and then ABC for Y. So a double zigzag wave 2, and almost 100% retracement, but we actually did fail to make a new high. So we retraced up to 29.39.86. The actual high was 29.40.91. So very, very close to 100% retracement. But wave 2 can retrace up to 100% of wave 1, so that works. So we got a double top there. And then this is probably the easiest to count. So this decline that we've had easily counts as an impulse wave. 1 down, 2 up, 3 down, 4 up, and then 5 down today was the low of the day by the looks of it. And that's for wave 3. And now maybe we're coming up in a fourth wave. And then we'll come back down in a fifth. And that might form a larger A or a larger 1. At this point, there's not enough information to determine that larger trend change. But certainly on the shorter term time frame, we've clearly changed the trend to the downside. So yeah, that's the wave count here as I'm working it. Now I want to point out on the Nasdaq composite, this is a much cleaner impulsive decline as far as the wave count goes. So on the S&P, a little more difficult to get a 5 down for the initial move down. On the Nasdaq composite, very easy. Clear 1, 2, 3, 4, 5 down, very impulsive. WXY, double zigzag wave 2, very corrective looking, very choppy. And now very clear 1, 2, 3, 4, 5 down for wave 3. And the bounce has started, as of today. Towards the end of the day, we started bouncing pretty hard. And, okay, so yesterday the equality relationship, we seem to be finding support there. So I wasn't willing to embrace that the Nasdaq was breaking down just yet. But given today that we got close to that 1618, clearly broke out this parallel trend channel. And I'll just remove that equality relationship at this point as we've gone way through that. I'm now willing to embrace that got a little more bearishness coming in the market here. So yeah, Nasdaq composite, pretty clean looking impulse wave to the downside underway by the looks of it. So I thought I'd show that. And just back to SPX. What was I going to go through here? Oh yes, so SPX also went well through its equality relationship, if that was going to be an AC. So and we got way through the 1618, so we overachieved to the downside as far as a wave 3 fib target. So things are definitely looking more bearish here. So I'll go to the Thinkorswim candlestick chart now. So here's SPX daily. So we're well below the T line now, below the 20-day simple moving average. The 3T line is crossed below the T line. And so far we've had a little reaction off that 50-day simple moving average, but no reason that that'll necessarily hold us here. At this point, I'd kind of be surprised if it does, as we're breaking down quite nicely. So this is the daily, okay? So not a clear, there's no bearish engulfing here. We're just breaking down, but no clear, other than, a bunch of upper shadows kind of rejecting these higher prices. That's the only real candlestick visual we're getting for, some bearishness. And certainly, you can see the buy and the dip on the long lower shadows, but that's not stopping us from still working our way down here. But on the weekly chart, there's some more information here. So there is a weekly bearish engulfing candlestick here on SPX. So that's a pretty strong sell signal, and that engulfed last week's real body on the candle. And last week's candle was a doji, and now we have a bearish engulfing after a doji. That's a left-right combo. That's quite a strong sell signal from such a toppy-looking market as far as our wave count goes and everything. So yeah, everything's kind of lining up now to look more bearish. Amazing how much clarity a day can give, right? Okay, now on the Dow Jones Industrial Average, Dow breaking down, closing below the T-line, 3T line starting to cross below the T-line. Although the Dow is kind of reacting off that 20-day simple moving average. So the Dow still holding up a little better than the other two indices, but if they really break down, the Dow's coming with it. That's the bottom line. Now we'll go to... Oh, actually, no, I want to show one more thing on the Dow. So on the weekly, so nothing clear here on the daily other than we had this gravestone doji, this long upper shadow, very small real body. So a huge rejection of these higher prices. So that was a potential reversal candlestick, and then we confirmed by breaking down here. Now on the weekly for the Dow, this week, kind of a gravestone doji on the weekly. So just much like what I showed at the top of the daily there, we're getting the same kind of thing on the weekly here on the Dow. So definitely not looking too good here. Things are starting to definitely point to a little more bearishness. And let me get to the Nasdaq, because that's probably the worst looking one here. All right, so Nasdaq, you saw the wave count there on the other chart, but here's the same thing. So you got the channel, so we got 1 down, 2 up. Now definitely a 3 down in progress, or 3 down in place. Now working a 4th, or potentially a 1, 2, 1, 2 if we're really gonna break down in a extended impulse wave to the downside. But clearly breaking below the parallel trend channel, getting way past the equality relationship that we were supporting on so nicely yesterday. So I'll take away the equality relationship now that we've smashed through it. And as far as daily reversal candlesticks, nothing clear there other than, yeah, we're coming down. But the Nasdaq on the weekly looks horrible. So here's the weekly chart of the Nasdaq. Look at this. Huge weekly bearish engulfing. 1, 2, 3. Do we actually engulf that one? No, we don't quite. Well, let's see. We opened at 8,087.95. We opened this one at 8,091.50. Oh yeah, okay. So we are engulfing 1, 2, 3, 4 prior weeks with the bearish engulfing candlestick on the Nasdaq composite. So that's an extremely powerful sell signal. And given that the Nasdaq's wave count's also looking quite bearish, and also I'll go to the daily here again. You see this Elliott channel I drew, and then we broke out of that. So we lost the Elliott channel, came up, failed to make a new high, and actually basically found resistance on the bottom of the Elliott channel where it was providing support on the way up, and now breaking down. And now obviously, like I said on the weekly, huge bearish engulfing 4 prior weeks. So Nasdaq, tech, just looking very bearish. Wow, yeah, big change from yesterday. Now the Vix Volatility Index. Okay, Vix is also showing something finally. So we finally broke above multiple prior resistance levels on the Vix. So our first one here was 1563, and our second one was way back here at 1686. So we went as high today as 1736, and we closed just below 15. So VIX is changing the trend, and when VIX changes its trend into an uptrend, that means the opposite for the equities. They're going to change their trend to the downside. So VIX definitely giving a warning signal after being dormant there. And obviously the wave count and the candlesticks not looking too good for upside on the indices either. So that brings me to, from a trading perspective, what does this mean? Well, today I closed a bunch of long positions that I had. Took profit on a lot of things: Boeing, Cat, Apple, all kinds of stuff. Cleaned up my positions quite a bit. Still maintaining a couple fairly small longs, but nothing substantial. Most of my capital, under these kind of market conditions, I like to just be a very short-term day trader, scalper, in and out. Very, very small overnight positions if there are any. Or if you're doing overnight positions on the futures, that's fine because they keep trading, so you can have a stop that'll get you out if something goes against you. So that's how I'm playing this. Much like what we had earlier this year in February with all the downside and then the choppiness after. Under those kind of market conditions, lots of good intraday volatility, but hard to have those flowing, trending kind of trades where you just ride the uptrend or ride the waves. That's harder to do if we get into a more bearish tone, or even just a choppy corrective tone. So yeah, you gotta, as the market conditions change, you have to change your trading style around it. So that's definitely the game plan for me. Just devote more time and capital to intraday and scalping and that sort of thing. All right, that should be good for now. Serial Trader signing off.